It's a countdown to chaos. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, a critical deadline looms as the stock market is now facing a blow-off top. Just as a key buyer is about to exit the market. We're going to talk about what's going on and who this big player is, why there's such a factor in the market today. But we're first going to look at the machine positioning and how they're set up, because remember, in the last couple of weeks, we've talked about how the machines have been buying, now looking for someone else to take over, whereas institutional retail, someone to take this market to that last leg higher. And well, we're starting to see that now. Let's talk about what's going on from the Goldman desk. Of course, we know we head over to there first every week, and they're looking. The question is, as we're trying to ask, who is the buyer here? Now, what they're suggesting is it's the money markets, and people are putting money in cash. There's $7.8 trillion. Of course, this is always the story with market participants. Now, I'm not a big believer in this notion that, hey, if $7.8 trillion out of money markets magically finds its way into stocks, that rarely actually happens, but it gives bulls some hope that there's cash on the sidelines looking to come in and chase this market a bit higher. And so they suggest that the pain trade is the least, the resistance to the market moving higher. Their target at the blow-off is 4,400 on the S&P. I'm going to take that a little bit higher. I think we're going to get up to 4,500. I'll show you why here in a little bit. But let's take a look at what else is going on. And some of their argument is retail flows from 401ks are really driving the market right now. And they're saying, look, there's a lot of money for every dollar allocated into the S&P 500 and the NASDAQ 100. A bunch of it is going into these mega cap company stocks. It's driving the market higher, and there's a lot of enthusiasm. They're saying the flows out of 401ks now are really surging higher. It's just, again, it's this market cap weighted market that keeps pushing everything higher. But that's not going to last long, as the peak open window for corporate buyback are going to end. The blackout window is now starting on June 15th. That is next week. And what we note is year-to-date authorizations are at 608 billion, the second best year on record. And they have the green light for the next 2 weeks, and flows drop by about 35%. So what Goldman is suggesting here, as we kind of talked about the countdown to chaos, is the corporate buyback flows have been huge so far this year, going into an earnings season that we're largely now going to expect to see some of the after effects of the slowdown in the economy, as of course all the pandemic stimulus is gone. So notably, what they're kind of suggesting is look for corporates to really stuff their stock right before their blackout. That could give us this blow off top at a time where machines are already positioned deeply long. Here we can look at Goldman's global CTA model, and over the next week in a flat tape, they're only looking to buy 3.7 billion. This is very little in global equities space. 3.2 billion in the S&P 500. Again, that's not a lot of money. In an up tape, 13.5 of global equities, notably only 1.8 billion in the S&P. So what this is suggesting is that the CTAs are going to be mostly flowing in an up tape to some of those major global indices that have been lagging behind over the next month on a flat tape. 40 billion in global equities to buy, 6.5 billion in the S&P. Again, this isn't a big number. Even in an up tape, you get to 80 billion, which is kind of decent, but notably only 3.5 billion in the S&P 500. It's only when you start to see a down tape, if there's over a down tape in the next month, you're going to look for these CTAs to lock in their positions and then sell in a big way. And this is a big guide for those of you who are trading to see how these machines are looking at the market. Is when they make a whole bunch of money, they start effectively, they don't actually do it this way, but think of it as they're raising their stop loss levels up and looking to close out their positions and hold their gains. That's what you're starting to see. These CTAs are suggesting is if there's a big down move, they're going to be one of the first to get out. Let's talk about trigger points here. Now we've got the data from TD Securities. They're now maxed out. I told you this is going to start happening. You're going to see companies maxed out on the long side, now only looking to sell if the market drops for them under 42.45. Watch that as their first signal come. And I still think, well, I'll make the case of why the S&P is going to 4,500. Let's take a look at our screens here. We got momentum is positive on the S&P. We see the RSI is at 66, so we know momentum's positive there. The MACD's got a nice positive cross. Our report, Momentum Timer Pro, which looks at a number of different technical signals, smooths them all out, and then gives you buy signals over a 1, 3, and 6 month window, along with the daily signals. Got 11 consecutive daily buy signals. You see it right down here. You see it maxed out on the 1 month window, maxed out on the 3 month window, and maxed out, almost maxed out on the 6 month window, which tells you momentum is extended. So this is a good indicator that it means the market can go a bit higher, but notably momentum is highly extended as it is. We've been maintaining our March 30th buy it open signal at 404.09. Keep suggesting tighten up your stops a bit. Closing window at 429 on Friday. We're upside target now 438.96. Downside target, we'll show you where support is. And then our own report, our CTA-Timer Pro, which models how those machines are positioned that we see from companies like Goldman and other companies. And we run a historical overlay, so ours often is well ahead of this. You see they've been 100% long for a while. Again, both of these reports, you can get the CTA report, $30, link in the description below. Markets Insider Pro, which includes Momentum Timer Pro, $60 a month. Then that includes a research from my buddies Jeff Snyder and Tracy Schuchart as well. So you can check those out, both of those in the description below. But let's take a look at the chart and make the case of why the market here is going higher. Here we have the S&P 500 on a 2-year chart. So there'll be momentum. Look at the RSI. It's not at overbought territory yet. It's still moving higher. The MACD's got a nice positive cross, looking like it wants to go higher. You can see the volume profile right here, the red line. We told you when this thing finally eventually breaks up here and then gets past the neckline of this inverted head and shoulders. You see a left shoulder, head, right shoulder. Here's your neckline breakout. Up here, 4,500 is right in this next supply zone, around 450. This is our upside target. If this thing can just break through this 430 range here and get up to around 439, that's our initial target, with the final move up here around 450. So you can see the case there. This is a beautiful setup to the upside, and it gives you all the confidence you have to, at least as you've seen before, to take that trade up. Now, for those of you on the CTA report and Momentum Timer Pro, we put out a big weekend watch list for both of you. And notably on the CTA report, guess what? It told you to buy the S&P way down in here. So if you're looking at your own reports and saying, why didn't they tell me to buy down in here? It told you the markets, the CTAs were short, and then took you higher from there. That is a cool thing about our report. Let's take a look at the QQQ and see what's going on there. Momentum is positive. RSI at 69. MACD's got a positive cross. 25 consecutive daily buy signals on Momentum Timer Pro. Maxed out on the 1 month, maxed out on the 3 month, and almost maxed out on the 6 month window. Telling you, if you're playing chase now, you're too late. You should just let this thing go. If you miss it, I'll show you how to get it the next time. Look at, we have a March 30th buy it open, 315. Keep telling you, tighten up your stops. Don't be too greedy here. Just take the gains when you got them. So tighten up those stops. Don't miss out on this. Upside target 368. And look at this. Our CTA report has been maxed out on the long side, and I'll show you I'll show you where it told you to buy in. Some of you already know this. If you watch the show on a regular basis, it says buying down here. If you can only imagine, were you buying tech stocks down here? No, everybody was selling them and then told you to buy again here. It's taking you up all the way. Where are we saying this can go? 368. That means our next target is right up here, right around where the 200-day moving average was a sign of resistance before. Potential move now up here to 380 after that. So look, blow off top. We're looking at this for the QQQ. We notably were at overbought territory, both on the MACD and the RSI. But as you know, you can get there and you can still go higher. Remember, look at those corporates to jam the tape before the blackout. Let's talk about bonds here, because we're now getting some updated information from Goldman now suggesting that their CTAs are about to buy bonds in a big way, notably that only in a down tape or flat tape at this point do they see even mild selling. But what they note is a 1 standard deviation up move or 2 standard deviation up move, there is going to be a massive amount of CTA buying in the bond space. Of course, we know on Wednesday we've got Fed, Jerome Powell is going to be, of course, announcing if the Fed's going to hike or not. We'll be covering that then, but keep in mind, any move to the upside in bonds is going to be aggressively bought by these models. And now let's take a look at TD Securities. What do we see here? Under 3.7% to buy. Why? Because they're not selling anymore. Again, all these machines that are kind of almost near extreme positions on the sell side, that should give you some confidence to buy into the market. Even if you don't trade bonds, look for it as a trade. We're making the case. Well, we're coming out of a rectangle pattern, and we've talked about this rectangle before, but it looks just like a rectangle should look, where prices fluctuate between two fairly established horizontal lines from a top and the bottom. This is seen as a large reversal pattern after a big decline. That's what we're looking for, is this to break out to the upside. So let's take a look here at TLT. Oh, actually, you know what? We need to look at our screens first, because that will actually help a lot. Here we see momentum is positive. RSI is 46, so it's coming out of oversold territory. MACD's got a nice little positive cross building. Momentum Time Pro, 8 consecutive daily buy signals. We're still holding our buy it open at March 20th. And why are we doing that? You may say, why didn't you close that out? Hey, look, in a trade, think about it this way. Not all of your trades are going to be winners, but if you have a couple like our S&P and NASDAQ that are performing really well, you can hold on to one if you're fairly convicted the chart's going to play out in your favor. In this case, we are. So we're going to leave that on there. Upside target is at 106.39. But remember here, our CTA report had told you that this thing was like minus 100% not long ago, and it's been ticking up. People aren't looking at it, but there it is. It's telling you, look, the machines are looking to buy. What did Goldman just tell you? Look, their machines are short. TD Securities said their machines are short. And what did CTA-Timer Pro tell you to do? Lead the machines. There we go. Notably, 8 consecutive daily buy signals. We can see momentum on the 1 month is at a minimum level on the sell side, so it's building there as well. Momentum Timer Pros nabbed that call as well. Let's take a look here at TLT, and what do we see? This beautiful rectangle pattern here. Here you have levels of support all along the bottom. Support, 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 support. And it's bounding off this. We'll zoom in a moment, but I want you to see this top upper bound here. There's your volume profile line of the 2-year mark. It breaks this upper bound, and then it is off to the races here. And so again, beautiful setup here. CTA-Timer Pro had this thing nabbed at a minus 100 down here, particularly on 10-year futures. It's telling you to start buying into this rally. If this thing gets going here and breaks out above these moving averages, breaks that volume profile line, you can see momentum is starting to trend higher here. MACD's kind of following along slowly, but you get a break above this line here, this 108.64, and all of a sudden you're going to watch this big decline here rally up here in a big way. This is a reversal pattern, my friends. Keep an eye on it. All right, let's talk about gold. Many of you are wondering, how come it doesn't drop to that $100-ounce call you made? Well, hey, in time you watch, it will. Buying above 1980 an ounce right now, selling below 1960 on gold. We're still maintaining our view that gold goes down because this has got a triple top going on here, and you have to respect the triple top from the standpoint is you think of this as attackers, attacking the line, and the defenders hold them back and they get pushed back. Then the attackers regroup, they come at it again, and the defenders hold the line again and rejected back. The attackers regroup again, but they're running out of attackers. They're running out of people that are getting excited about fighting. They run at the line again. Now fewer attackers. They get rejected this third time. At some point, the attackers just say, hey, you know what? I'm throwing in the towel. I'm going home. I know many of you said if it pulls back your buyers, it's great. Because watch this thing pull back. It's got a big likely move to come down, and now we're looking at, again, that triple top. Let's head over to the charts here, see what's going on with gold. We'll start with GLD, and what do we note here? On the volume profile, zoom into the 6-month. Sellers are above. So now we can see very clearly sellers above on GLD. You see sellers above on gold futures. Again, supporting a call of our initial move down to 1920. If it doesn't hold 1920, well, then the problem is now you're talking about a move all the way down to around 1850 to 1820. So off that big move up the top, our first call is 100 ounce, potentially now down to 200 ounce decline. I know many of you say you're going to buy. Great. I hope you do. But look at this. You see the RSI. Momentum is slowing. People are losing the excitement of the trade. You'll notice the 21-day moving average is acting as resistance. So how do you know this is validated? It's really simple. When you get across to the downside of a moving average and it can't sustainably break back above it, it's a bearish window. Look for the 50-day to also act as support here. That's the green line, or resistance. That's the green line going down. Momentum is still slowing. Gold likely case to the downside. And of course, we can make that case on our own screens. We should look at this first. Momentum is negative. The RSI is at 46. Of course, we just saw that. Momentum Timer Pro, 18 consecutive daily sell signals. So it was all over this. How about our CTA-Timer Pro? It's picked up on this little move back up here, but overall it's holding a short position. We say the upside target's the 50-day, downside target's 178 on GLD. Let's take a look at GDX because we talked about this double top. It's a reversal, but in a bigger trend, it actually can be a picture of a bull market higher as, of course, that trend gets reversed and buyers step in. Let's take a look at GDX because what do we have? Positive momentum. RSI coming off of oversold territory. MACD's got a positive cross. Momentum Timer Pro picked up 2 consecutive daily sell signals. But look at this. The 1 month window is maxed out to the short side. So there's likely going to be some sort of short-term move here to the upside. If you're a day trader and you saw the report, maybe you picked that up. We can see that the short-term, the fast algorithm of CTA-Timer Pro picked it up. The long-term one's holding this case together. Upside target 32.16, downside 28.12. Let's take a look where we think this can go. And here's your short-term move right back up to that volume profile line, 32.16. Maybe it nudges a little bit higher. There's not a lot here. Again, you've got that cross down through the 21-day rejection to the bottom side of it. Not very exciting here. If you're day trading this, keep your, make sure you've got your stops set accordingly. Downside move, what are we saying is 29 or 28.12 all the way down to way down here, potentially getting down into this level down here. We're still holding that call. The initial move then looks like this thing's going to go down. I think it gets all the way down here to 27. It dips down to 27 and holds and bounces off there. That's where you would really want to look to take a position at this point. But just like gold, you see momentum slowing. RSI is kind of crossed over, but looking to flip back down to the downside. And how can we not talk about the dollar? Of course, dollar is, of course, the big call for gold. If the dollar gets more bullish, that is downwardly positioning for gold. But what if the dollar is about to head lower? There's a nice trade set up here. I think the dollar is headed lower because look at this. Momentum is positive. The RSI is at 56. It's slowing down. MACD's got an negative cross. Momentum Timer Pro, 38 consecutive daily buy signals. Maxed out on the 1 month. Fairly high on the 6, 3, and 6 month window. Telling you momentum's maxed out on this thing. Upside target at 28.71. Look at our CTA report. It's maxed out to the long side. So, you want to look for a trade. You want to look for a contrarian trade. Find something that's maxed out. So there's dollar bearish funds that you could look at and whatnot. Let's take a look a little bit deeper here at the chart because the setup looks to me to be a tired dollar looking to head lower. That could be a bullish catalyst for gold. Let's find that UUP, here it is, rejecting at the 21-day moving average. That's what we called. You'll notice a 2-year volume profile right down here. Our report, Momentum Timer Pro report, told you to buy this thing here and then told you to buy it down in here. So a nice little trade to the upside if you're into currencies. But look at this, momentum is slowing. MACD is rolling over. Price is going to come down. Let's zoom in to the 10-day. What do we see? Sellers selling the dollar above here. Let's take a look at DXY. And what do we know? That too looks like it's rolling over. You're getting a lower high here on this bounce up. Back, I didn't even make the previous high, so it's rolling over. Looking back to support around this 101.42 range. If it holds support there, then you've got a chance it bounces off that. Otherwise, but longer term picture here is a dollar as going lower for sure. That again could be bullish case for gold, but I'll let you give me your feedback on what you think. With that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans. Bye now.